As cattle producers, we are gravely aware of how insane this market has been over the past 2 weeks. And unfortunately, there is no sign of that just roller coaster chaos slowing down anytime soon. In today's podcast episode with Dan Gerhold, we are breaking down the cattle market, what we have seen over the past week, what we continue to see, and how Trump's comments on Argentina and then the Senate's remarks from last night. We are recording this on Wednesday morning at 8 a.m. You guys are going to be seeing this on Thursday. So if anything changes over the next 24 hours, please take that into consideration as well. But taking into consideration the Senate remarks from last night, how that's going to affect the cattle market today, and everything else that we have seen. We cover LRP and coverage and just options for cattle producers to protect themselves in this market and what that even looks like. And if it is the right business decision for you, because it's not the right business decision for everyone. And so Dan breaks that down and just explains what in the heck is going on with this market and everything that we have seen over the past weeks. So without further ado, let's go ahead and get into this podcast episode with Dan. And if you guys could take a second, if you're watching on YouTube, to like and subscribe. If you are on any podcast platform, please make sure that you are following the show and take a second to go review it as well. Thank you so much from everyone here at the team, and let's hear from Dan. Dan, welcome back to the podcast. How is life in Iowa? I hear you guys got harvest all finished up. You can finally breathe again. Are you getting a full night's sleep now? Like how's life going?
Yeah, it's if you can see, I need a trim. Been hard and fast, and gotta love it. Done before Halloween, so it was a good harvest. We minimal breakdowns. Life is good, so starting to catch up on sleep, and then this happens with the market. So if I could go back and sit in the combine and forget this ever happened, I'd do it for everybody. But here we are. So yeah, glad harvest is over if this is going to happen.
Exactly. At least you're not having to juggle both at the same time. So, I mean, if you had to choose, you'd probably choose harvest, but it's not both at the same time. So that counts for something.
Yeah, for sure.
Well, what's happening with the markets, Dan?
Long story short, it's a great big market that's scared of its own shadow. Producers are scared. The government just won't stop.
They're a lot of helping the situation.
Oh, they're not. They're actually doing the opposite of what they should be doing. But hey, that's the government for you. Yeah. Long story short is, I mean, we all know our president came out and made some comments he shouldn't have. I truly believe he's been misinformed by the wrong people, but that's my opinion. He's actively trying to fight what he considers inflation in the beef market, and it's not working as he thinks it should. Box beef is higher because the consumer still wants beef, and the supply hasn't changed. So inevitably, what the market has done in the last week, it's traded a rumor. You know, we cannot blame this on Argentina imports. It's not the case. There wasn't enough there to make a difference. This is all based on a rumor. The thought that we're going to open the feeder or the border here pretty quick for feeder imports. So every day your back month feeders have been down limit for the last consecutive 1, 2, 3, nearly 5 days, trading days. So yesterday we didn't close on the limit. That was nice. There's a whole lot of gaps. I think all your back month feeder charts have 4 gaps on them now. 1, 2, 3, 4. Yeah. So inevitably a gap is the open today would have to be lower than the close yesterday. So or the low yesterday, I should say. So inevitably we put these gaps on the chart. The old rule of thumb is the gap acts as a magnet that wants to go back up and fill those gaps. I don't know that we're ever going to go back up and fill that top gap, but having gaps on a chart, 4 of them especially, it's pretty rare stuff. So everybody's kind of sitting on their hands. They're thinking, hey, maybe this market bounces. We go back up, fill the first 1, 2, maybe the 3rd gap, and leave that 4th one there. Now, the more gaps you leave on the chart, the less likely you're going to fill the upper ones. So, you know, if we could go up, fill yesterday's gap, the gap above that from Monday, I think we need to look at some coverage, considering our government's actively fighting with our market. So it's, like I said, coming back to what caused it, in my opinion, a lot of fear. So, you know, I got to bring it back always, Lauren, look at the actual signs, what's going on. So, we've talked about in the past how open interest is kind of a sign. You can watch that, see who's trading it and how they're trading it. When you're going limit lower, typically you'd expect open interest to drop drastically. Your traders want out. Anybody long is stuck in a long position and they're scared. They just want to blow out. So everybody's blowing out first thing in the morning, goes down limit. You would think open interest would drop. So up until Monday, open interest wasn't dropping. In fact, it wasn't going up. It was just flat. So what's happening? Well, typically you have a few traders. If you're going down, especially the limit, in a flat open interest market, that means you have nearly an equal amount of new sellers coming in as there were buyers leaving. Okay, so managed money, small specs, whatever, whoever was long this market wanted out. So let's say, on Friday, total volume was 34,000 contracts, but open interest was nearly flat. So if that was the case on Friday, you had 17,000 contracts that were long that wanted out. They liquidated. And you also had 17,000 and put shorts on, and that's what caused the limit down move. That's how you get your open interest to stay flat. So inevitably, it's a fear-driven market. You got the fear on the side of the long who's freaking out because we just took, 45, 50, 60 bucks out of a feeder cattle market that they were long and believed that they had a fundamental reason to be. And you also have the hedging side of it. Hey, I can't sell my calves yet. Let's just hedge them off. Let's sell some futures. So that's a problem. I hate fear markets because they way overdo it all the time. They will. You could go back a month ago and say the market was going up on fear that we were running out of feeder cattle and we were going to miss out on the biggest move, run to 400 or 500. There was all sorts of talk and thoughts then. Now we're in a different fear market where, oh shoot, party's over. This thing's going down forever. Everybody would just calm down, let the market breathe. I think it probably level off for a little bit, or it's got the potential to level off. But inevitably, like I said, you got 4 gaps on a feeder chart. It's nasty. Now, the really, how do I put it? The really crappy part about this, Lauren, is obviously some producers kept waiting and justifiably so. The market was on a tear higher. I don't blame them for waiting to put coverage on. The way that chart looked, and it had more to go, but they were waiting, and then all of a sudden you lock the market limit down, and we can't put LRP. We can't sell futures until the next day. You can buy puts, but oh my gosh, were they expensive? And at the money put was running like 20, 25 bucks. Inevitably, the government does not allow LRP on limit down days. So we had, 3-4 days in a row, LRPs were not offered. And here we are, we go from 380 feeders, and last night they finally opened LRP since we didn't close on the limit. And now, best you can insure January is 325, costing 12 bucks. Like, boy, we just took the gravy out of this market pretty quick. So yeah, I mean, you look at 324.88 with coverage costing 1205. You're covering basically 312 and a half. So 312.75, whatever. It's really hard for me to push coverage now because this market could calm down, level off. Everybody goes back to doing chores, realizes, hey, consumers still eating. This isn't World War III. This isn't COVID. This isn't, the Great Depression starting. This is just a market overreacting to a rumor. I'd love to tell everybody that confidently that that's going to happen and we, might bounce back in the 340, maybe touch on 350 level. I'd love to be confident and tell everybody that. Problem is I can't measure fear. Now fast forward to this week. Today, limit down again. Everybody's still in freak out mode. Monday was the first day we saw lower open interest. We went from 82,000 contracts down to 81,600. Okay, so we dropped 400 contracts. Nobody's thinking anything of it. And then bam, yesterday happens. Yesterday we saw a drop of 6,000 contracts. We go from 81,622 down to 75,461. So now all of a sudden you have a market that comes off limit, doesn't close on the limit lower, but still is down. and open interest is lower on one of the highest volume traded days we've had in forever. It's not a record, but we traded 83,000 contracts. We traded more than we have in open interest. What does that tell us? I mean, now all of a sudden, first day you're not locked limit. You close off your lows. Now all of a sudden, does that mean we're going to calm down and bounce back up? It wouldn't surprise me. They caught last night. The Senate's up to it. If they're starting to point the finger at the beef industry, and I don't know if that means cattle are going to go lower again today, but now you're talking Brazilian imports. You just can't make this up, Lauren. It's not a laughable moment. It's just truly sad, but it's the scenario we're in. How do we manage that risk? If we could all go back in time, we'd fix it, and we would have bought LRPs and puts and sold futures all at the high. Hindsight 2020, but we didn't. So here we are trying to figure out, what do we do? Well, if the market calms down, there's a pretty good chance that we can go up and fill yesterday's gap. In order to fill that gap, we have to reach 334.42 and a half in the January. Okay. Then there's a gap above that from Monday morning. That's a big one. To me, that should be a big magnet or a target for us to trade towards. I would like to see us move towards that. Fill it, we have to rally to 348. That gap, like I said, big magnet, strong urge to go fill it. The one above that from Friday morning, that one gets harder to fill because you're talking about a gap that starts at 356.42 and is not filled until 356.87. Okay, so it's a tiny little gap, but it's still a gap nonetheless, and you have to break the 40-day moving average to get there. That next gap that's all the way up at 373 and isn't filled until 376.75. I personally don't think we're going to fill that one. So I would be very, very aggressive in getting some coverage in place if we get up, knocking on that at 348. I really think a producer should consider, this year is a perfect year. You've got cheap feed. There's plenty, a lot of guys have hay laying around. They have cheap corn. Shoot, have you thought about, if you have the ability, background them, precondition them, take them out to February, make them a little bigger. All of a sudden you can insure 321. Yeah, it costs you a little bit more at 1397, but you're still making money on the gain. So that's another thing worth considering. Probably we've got to get away from the fear-driven market. I would like to be really, really optimistic and think that, higher boxes are going to get the feed yards to stand their ground this week. Sounds like the Packers are trying to weasel some cattle away from producers at 230. Not a good look for the fat cattle side of things. If people stand their ground and nothing's changed, even if they open that border, it's not going to affect fundamentals of this market between now and, let's say, May. You start throwing feeder cattle at us, we don't have fats until May, June. So I'm not a rocket scientist here, but we still have the exact same supply and demand we did 2 weeks ago.
Yeah.
Once again, it comes down to fear. I hate overreacting in a fear market because inevitably it can cost producers dearly. So hopefully everybody just takes a breath. I'd like to see us calm down today, but like I said, we'll see how big of an effect that Senate decision has on our market. Could drive some more fear. Inevitably, I don't think it gets passed. It has to go through the House, has to go up to the president. Yeah, maybe it does get passed, but here we are. So, yeah. Don't know if I covered what you were wanting to cover, Lauren, but what a market.
What a market. And I think the unfortunate thing about a fear-driven market, Dan, is the fact that we can sit here week after week and we can look at what has happened throughout the week up until Wednesday when we record this, and we can see signs and we can be like, this is kind of what it's pointing towards, what we think is maybe going to happen. But with a fear-driven market, we didn't see this coming. There was no indication of this. The market was on its way to a little bit of a correction. The market was going to do what the market was going to do. But with a fear-driven market and a market driven by the news and the media and he said, she said, we have no way of sitting here and being like, well, as long as no one else says anything, we should have a pretty chill fall. And we'll be okay and we'll recover. But we can't, I don't have control over what anyone in the government says about the cattle market. Unfortunately, I would love to send some gags to DC, but can't do that. Yeah, and then the whole Senate thing that you're talking about too, like, good Lord, let's just go around the merry-go-round again. And what's going to happen next week? I would just really like to find a hobbit hole to go crawl away into right now and be like, Dan, can you come knocking when the government stops talking about cattle in the cattle market, and then we can talk again, because it's just changing so rapidly right now.
Inevitably, I mean, I'm not making excuses for President Trump. He makes statements he shouldn't have, but I do feel like somebody is, he's making statements that you just about have to be misinformed to make those statements. Because inevitably the two are not, we all know we don't sell beef. So, I mean, attacking the rancher specifically is not going to solve the problem of beef being high in the grocery store for the consumer. Inevitably, I wish I could go back in time or I wish I had his number and could make a phone call and set him straight. But here we are. You have the government trying to fight what they consider is an inflation caused by Biden. Yeah, it's unfortunate where we're at. It really is. And this is why they always say you don't want the cab drivers talking about the cattle market. You don't want the government talking about it. You don't want to be on MSNBC and CNN. And we were. I mean, how many times did we talk about it, Lauren? It was just about every other day for like 3 weeks straight. That's all they talked about. That's never a good sign. That could cause some serious long-term damage. I do think producers need to be considering very, very heavily getting unborn coverage on their calves for next year. You have a government that's aggressively trying to fight this market that was on a runaway train, and now it's the opposite. I'm going to make the most obvious statement of a lifetime. LRPs look like absolute garbage compared to 2 weeks ago, but they look absolutely phenomenal compared to a year ago. What do things look like a year from now? We could be right back at 280. We could be below that level. Honestly, as fast as this thing has gone down, I mean, you took 10% out of a market, a big swing in cattle, a cycle swing, I like to figure is 25 to 35% over exaggerated in both directions. So if that move a month ago, that stopped 2 weeks ago, if that one sent us to those new highs, if that one was way overdone, we're going to go way overdone to the opposite direction. It might take us a year, 2 years, 3 to do it, but I'd be prepared. Get that coverage on a full year out, protect that next calf crop. And like I said, consider, if you can, consider making your cattle bigger, stepping away from this market, letting us get out of the spotlight. Inevitably, the worst part about this, as everybody's seen, boxes have gone up. So while they're attacking the cattle industry, consumers have the potential to end up paying more in the grocery store. Have you ever seen a politician go back and apologize and say they screwed up? I haven't. So I think we have to use the market we have. We have to look forward, look at your P&Ls. I still think protecting all the way out 52 weeks, you're covering a yearling at 309. Looking at history, that's still a good price. We could be above it next year. We could drastically be below it. So I think we have to move on, get past this. Like I said, pay attention to those gaps, see what trading does in the next, finish this week off, and inevitably make sound decisions, not fear-driven decisions. Yeah. I'm running out of words to describe this absolute disaster.
Yeah, absolutely. I think that our call as cattle producers and as people within the beef industry is to not fall into the whirlwind that is happening right now. Like, don't let fear drive you. Don't let the media drive you. Don't let what the government is saying drive you. We need to be paying attention to it. Absolutely. Because it affects us. It affects us gravely. We've seen that over the past 2 weeks. But don't be a part of the problem. Be a part of the solution in the aspect of, we're going to keep a level head. We're going to understand that we don't have control over this, unfortunately. And so how can we best protect ourselves? How can we best look at this and take the emotion out of it and look at this as a strategic business decision that we have to make? Like, sit down and actually, like you said, Dan, look at your P&L, look at your numbers, talk to your board of directors, aka your wife and family or whoever else is helping you on the operation, and make a sound business decision that works for you and your operation, because everyone is going to be in a different situation right now. Like, if you can hold on, it might not be the worst idea, but not everyone has that ability. So what are you going to do right now to help prepare you for next year, next spring, next fall, all of those things, and what that looks like for you and your operation? Dan, do you have any closing remarks as we round out the podcast, or did we hit on everything today?
And I think we've probably covered just about everything. Yeah, buckle
Gotta
up.
love it. Buckle up. It's one hell of a roller coaster ride that we didn't think that we were going to have to be on, but here we are. So buckle up, and we're here with you.
Who would have known this was going to be the black swan that put an end to the great cattle market?
Did not see this coming, that's for darn sure. But I feel like that's also the theme of this year. I remember like 3 or 4 months ago, I was saying how they were going to put 2025 in ag economist textbooks here in about 5 years as research studies of the economy within agriculture. Well, yeah, I think we solidified that aspect over the past couple weeks. 2025 is definitely showing up in some textbooks for some case studies in the future.
Absolutely, yeah. Get ready. It's going to be a time of tight margins. I feel like, and nobody enjoys those. We all like hitting the big home runs, but be ready to protect them base hits.
Yeah, absolutely. I couldn't round it out any better. Dan, thank you for your time. Thank you for your insight. To all of our listeners out there, if you enjoyed today's podcast episode, please make sure that you like and subscribe on YouTube. We really appreciate it over here at the team. And if you enjoyed what Dan and I talked about today, you want to learn more about LRP, learn more about coverage, insurance, just what your options are for you and your operation, head down to the show notes. We have a link down there for you guys through CattleUSA Insurance, where you can get a hold of the team and discuss those options that you may have for your operation. Dan, thank you for your time. And to all of our listeners, we will see you all tomorrow on another episode. Have a good one, y'all.